So Robinhood is now allowing you to invest in stocks by buying fractions of a share. You can, instead of buying one share, you could buy in dollar amounts. For suppose Apple stock for now is $450. If you don't have $450, you can just buy it $1 of that $450 stock. And that's good because that allows you to put a little bit of money. As with time goes by, you'll eventually have a certain amount by the end of the year, and then you can fix the amount you want to put in. So let's say you want to put in $10 a month, whatever amount you want, and so that amount goes to Apple or whatever stock you choose. It's very simple, straightforward, and that's kind of like you building your own portfolio, your own 401 version, your personal 401k. And that's what I'll be doing, just adding a bunch of stocks, and then probably risking, because stocks are a risk, and so I'll be risking maybe $300 a month in good stocks, quality stocks like Apple, Tesla. There's controversy about Tesla. People would say it's not quality, but it's all risk. It's all like a matter of getting your feet wet. But what's interesting about this is that now that it is opening the door for more people to get in and have access to stocks when they're all at all-time highs, it's so odd to me that right when everything bounced back up, now it's available. Robinhood has been available since early or late 2017 or late 2016. I got involved in early 2017, and it's interesting because back then it was just very basic: buy shares, and there was no options, there was none of that. Now options are available. There's more you can do with Robinhood, but now that everything bounced back up and it's all at all-time highs, now it's available to the public like crazy. And for me, I'm just raised the question whether there's something behind it all, whether once everybody starts piling in, stocks go crazy up, will there be another crash? And with the election coming and Donald Trump pretty much convincing people that he should win again because stock market recovered and it's now at all-time highs again, the middle class is gonna be like, everything seems fine. They're not gonna blame it on Donald Trump right there, that because it would have happened in either presidency. And so it doesn't matter who wins. I'm not advocating Biden or Trump or anybody else. I'm just advocating for you to take charge of your own life, decide for yourself what's right for you. This video is just ideas, entertainment. That's what my channel is called, Daniel Munoz Idea. And for me, what I'm gonna do is put $300 a month in Robinhood, and then spread those $300 around 30 different stocks that I like. The amount I put in each stock depends on maybe the price and the amount of shares each company has available, the market cap, and most likely I feel like it's going to be pretty even. The amount of money goes to each stock. So if it's 30 stocks and $300, $10 per stock a month. And I could do this like 10 cents. So 10 divided by 30, what is that? That's like 30 cents a day that I will be investing. Well, the stock market's not open 30 days a month, but maybe like 40 cents, 45 cents, 40 cents a day that the stock market is open is going to go to each stock. this is just a rough estimate. I haven't started, but I was organizing right now what stocks I'm gonna like and put my money in, and I'll maybe share the video of where I put my money. But this is a long-term play. Like, I also like to build my skill of trading stocks, which I suck. But in the background, I want good companies to be in a portfolio that I don't really have to think about. I did a calculation on a exponential growth calculator online, and it said that putting $200 a month for 30 years in an 8% return investment, whatever it is, stocks or whatever, but at 8%, $200 a month. I don't know if I did it so that it comes out to 1,600 a year, which is 200 a month. That's 2,400 a year. I don't know if I did it by year or by month, but I'm pretty sure I did it by year, and it ended up being like 600,000 after 30 years. And then, but that's investing $200 a month for 30 years. The principal is $200 times 12 months times 30 years. That's the principal, which comes out to, let me do the math, 12 times 200 is 2,400 times 30 years. So 2 times 3 is 6, and then 3 times 4 is 12. 6, 12, $72,000. And I think I got it right. I don't know if I got it right, but the principal comes out to around, like $72,000. That's the principal. So by putting in $72,000 in 30 years of your own money without working, and if everything goes well and everything's perfect, which everything's not, at 8% a year, you should have 600,000. That's what the calculator told me, man. I could be wrong. He should double check my math, but the principle should be correct. And that's what I want to leave you all with, that anybody can save $72,000 in 30 years, but not anybody can get that return in investment by themselves. So they need the help of companies who are growing. And so, it's better to just invest that money that you're willing to lose. You're willing to lose $200 a month, instead of, if you're low income and you could not buy beer or go out much and have fun indoors with your family, you could probably save $200 a month or $100, and that should probably do it. But I'm not an accountant. I'm not a financial advisor. These are just my personal ideas, and that's what I think I would do. I'm gonna do that. But hey, do whatever you want. Don't listen to me. I'm always wrong, and that's all I have. Bye bye.